folks, I'm LA Little and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week. What might it tell us about the coming ones? I do a show every Sunday night live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. And folks, we had a pretty good sell-off on Friday. That divergence that has existed continues to exist and to be exacerbated, and that is the divergence where the S&P, the Dow, much stronger than what you see on the NDX, the Nasdaq, and to some degree on the Russell. Now, not the Russell, but the Nasdaq was down like 2.5% on Friday. Big reversals. I've got the weekly charts up. We're going to use the weekly charts, of course, tonight for the most part. But the Russell and many of the indexes got all the way back up to retest regen zones on the dailies, flipped around, gave it up. Now they're back down here trying to break out the lows. The problem will be, if it happens, the situation will be ugly if these come barreling down and they start breaking out down here, because we know the mean time to failure is stretched on most of these indexes. The Russell's not too bad. It's about 70% at this point, but on the other indexes it's much lower. That's 4.5%, right, to get back to here. So if you're going to come down here and you're going to break this, this is the bar that would be broken. That's 4.5%. The problem, though, is not that bar being broken. It's both bars being broken. And matter of fact, on the Russell, and as we'll see elsewhere, a lot of swing point lows are starting to gather in one general area. And as you know, that can signal problems if they start breaking, right? So there's a price point, there's a general area here, and we're not even close to it yet. But if this continues to sell off or cannot rise, right? We've got price points from let me see, this low is 1076, 1082, 1099. So from about 1076 to 1100, 24 points. That's about, on the Russell, that's about 2.5%. Within a 2.5% range, you've got 3 swing point lows. If they begin to break, then we know that can lead to a fast move to the downside. If I look at the other weak index, that's the Nasdaq. Nasdaq's not set up quite the same way, but it does have multiple swing points down here itself. You got one here, you got another one there, and again, the Nasdaq much farther along than most. This one's already coming into the top of the big volume, wide price spread bar that signaled the last load before we did that last straight up move. Right, another one of those V-shaped reversals. That's about 3.5%, 3.6%. I want to bring over the daily chart on the Nasdaq. They're also set up the same way. Actually, I brought the monthly. That's not the one I wanted. Let me grab the daily here. And if we look at the daily chart, here the destruction looks a lot worse than it does over on the weekly. But the Nasdaq is already coming back in and testing into this bar with volume expanding. So it's hitting this bar, pretty good volume. It's taking this low out, and that ends up not being a swing point low because it didn't even get 6 bars before it came barreling back down. ABCD structures had already played out, right? One set of them. Now you got another potential set playing out from here, there, right? That could take you down into the top of this bar, right, which is the low. The Nasdaq, the Russell, the NDX, they're all set up the same way. and it's the continued selling of big cap technology and all these high flyers, most of which are in the Nasdaq. And I mean, we could pop through a few of these, and you probably know the names, but these names are getting hammered. Here's Netflix, right? Closing the gap, just keeps coming lower. That one should have bounced, didn't. Even the high flyer Tesla's starting to get hit now. We'll see if it starts pushing with some volume to the downside. Pandora, another one of the high flyers, right? This one's been killed. Facebook's coming back to fill a low. I mean, you can just go down the list, all these high flyers. Even stocks like Google and some of the others, right? Just getting hammered on the way down. So we've got serious pushes in technology to the downside. And one I failed to mention, which is the whole sector, is the IBB, right? Breaks the lows, volume expands. This thing's doing another large ABCD structure on the downside. You've got to move from here, actually it's all the way to here, back up, and now you're trying to take out the rest of it, right? That's a huge move down still. And these things were up, I don't know what the numbers were, I don't have them in front of me, but they're up big, the IBB. So when I look at all of these and I look at how they're trading, that's a lot of pressure that's still on these indexes. And I want to go back one more time. They did this off of a retest regenerate that we were watching to see how it would work. Here's the Nasdaqs, right? So when you break a swing point low, which is what happened here, right? At some point, you typically come back, usually within about 6 bars. You come back, especially on a sideways or a suspect move. You come back up and you retest to see if you can regenerate lower or not. And so in this particular case, you break this swing point low, you came back within 6 bars. So when you come back into that low, as we did right here, 1, 2, 3, 4, 5, 6 bars back into it, usually that says you can get to the other side of that bar, and that's exactly what it did. And then just comes off, volume expands, back the other way. Russell, even though Russell had 2 of them, it got over one, but it fell at the other one. And fell in the sense that it regenerated lower. NDX, same thing. And then let's go back on a daily chart with the S&P. S&P actually did the opposite because the divergence has been large. S&P gets over this high and that high. That's 2 highs to the top side, breaks out. Usually that's a 2 to 3 bar extension. 1, 2, 3, not much of a big move to the top side. Got the 3 bars and then reversed. And now what is it doing? Comes back within 6 bars, testing into this breakout high. That's a retest, regenerate. What's it going to do? It's going to try to regenerate higher. If you notice here, this is right at the lows already though. There's no room for any kind of, what shall we say, margin of error maybe is the way to say it. 1863.46 closes 1865. Actually got underneath at 1863.26 on Friday. If this does not hold, and there's a decent chance that it won't, but if it doesn't hold here Monday, or if it just drifts down and doesn't get right back up there on Tuesday, swing point lows, 1, 2, 3, all close. And again here, you've got a 91% MTTF on it, right? So if I pull over the trading cube so you can see the MTTFs, 91%, 83%, this thing's begging. It's all 53 already on the bullish, on the short term. This thing's begging to come back, right, on mean time to failure. That's the cumulative probability of a failure of trend on the intermediate term time frame. That's pretty nosebleed already. So if you're saying 91% probability, cumulative probability, if I go look and say, okay, where does it have to trade to reset? Well, it's got to break a swing point low. Well, it doesn't have to break that one. There's one right here. It's got to break that swing point low. That low, if we look at the price on it, is 1767. We're trading at 1865. So that's almost 100 points, 98 points. That's about 5.2, maybe 5.3% lower, just to break it. 5.3%. Well, that's a pretty good move. And that would actually maybe get someone's attention, because nobody so far still wants to leave the market. And why is that? Well, they keep seeking other things like XLU. Right? Safety. We go to safety when things get dangerous, right? We go to the XLP. We used to go to XLV, but we don't do that no more, right? Because this one's getting hammered as a result of the IBB, the BBH, the biotechs. We go to safety, and that's what they're doing. They're rotating in the safety, and now all of a sudden safety is overseas, emerging markets of all things, right? Now we've got emerging markets as a safety trade. I don't think that's going to last all that much longer, but you had an ABCD structure here. It comes off, right, back down, up. It's already finished it off. That was the swing point high. This will be the test, retest, regenerate. That's on the weekly. You got the same sort of thing. If I switch this over, you got the same sort of thing on the daily. You've extended pretty well. High volume high at the top. I suspect that one's going to come back in now. Okay? So when I look overseas, when I look at the markets, you know, they're trying to stay in the markets. Why is that? Because there's no place to put your money. There's no place to hide, right? I mean, in the sense of not so much to hide, but there's no place to make any money on your money. And they keep coming to the market as a result of it. And it's not because they want to. It's not because I don't put my money in the market because I want to. I put it in there because I think that's the only place I can make money on it. And still have liquidity so I can get out of the way if something starts going wrong. And that's what we're seeing pretty much across the board. I could go through the sectors, but you're going to see, I'll flip through 2 or 3 of them here. You're going to see these sectors starting to break back down. Here's the IYT. It tests the top. I've got them on weeklies now. Test the top, fails. That one's going to come back. Semiconductors, they came off big. You know, the semis have been getting bigger and bigger volume on the way up. This, to me, looks like the semis have finally put in a short-term top. If I bring over the daily, you can see what I'm talking about, right? You've got, how do you get range trades? Well, range trades is when you push and you push and you push and you never will stop, and then eventually you get some sort of a blow-off move. Volume expands. In this case, it blows off and comes back the other way. On the daily, the previous day was 46.56. It went to 59. It leaves huge volume up there. Sells off, right? This thing's coming back. That's a range trade now at best, and I suspect I mean, you just have a lot of air under a lot of these things, and this one you've got a lot of air. You really, you know, when you're coming back, you're usually looking, no matter what kind of analysis you use, you're looking for something, right, where there's some volume, or there's some wide price spread bars, or there's some ledges that have built up. In other words, congestion areas. You kind of have one here, but this thing never would stop. It just kept grinding higher. So I would think that it's going to try to come back into these bars when it really gives it up. You know, short term, it doesn't have to come that deep to start with, but the semiconductors, to me, look like not a place I want to be sitting right now. XLB, materials, test the top, fell. XLE, Now the XLE has been the strongest one. The XLE is still hanging above there, so that one still looks good. But you know, going down the list here, XLF, same sort of thing. XLF goes over, back under. That looks like it's, you know, still hanging, gonna test some more, but that one looks like it's gonna try to come back. We got earnings this week. You got JP Morgan end of the week. Alcoa starts things off on Tuesday or Wednesday, I believe. So earnings are going to be a big piece of this. Earnings are projected to actually fall year over year. And I don't think I've seen that for a while. We've been watching the earnings, each of these earnings seasons now for about for almost 4 of them now, I think. It's a year now. Believing that this market's going to take them to task if those earnings don't improve. And they haven't improved yet. This market taxed on 30% last year, even with bad earnings. So I think you're going to see earnings a little more scrutiny this time on the earnings front. Here's the XLK, same sort of thing, over, back, under. These all look like they're going to try to pull back. If I go overseas, you know, overseas much stronger, doing much better. But then again, to some extent, that's a problem. And the problem is that they too are kind of stretched now on the daily charts. And so let me pop over the dailies. This is Hong Kong. Hong Kong, nice big start, you know, big run up, wide price spread here in terms of the range. So you got a big range that's taking place. And we actually may get the situation here where, get these out of the way, where this range itself ends up being a big breakout one way or the other. And which way would you think? Well, you'd probably think topside, because these are so undervalued relative to everything else. But right now, it's still a range. Right? You don't have anything but a range going on, and until it actually breaks out one side or the other, it's still a range trade. There's some characteristics here that look good. Big volume push on the way up, right? Volume is tailed off. Looks like it wants to retrace some. Swing point high here. This is all on the daily, right? Hong Kong looks like it wants to take a little rest. Someone placed into my database, which was kind of nice, China large cap H shares. These are traded on the Hong Kong exchange. These shares actually give me a decent look into Shanghai, which I haven't had because the volumes don't come through on Shanghai. So even though these trade on Hong Kong, they are the Shanghai H shares. Now they're heavily weighted in financials, is a large part of these guys. Although they cap participation at 10%, still financials dominate. This one's going up, breaks a swing point high here, going into resistance. Looks to me like this one also is going to flip around and come back. So I don't see China near term supporting these markets. Matter of fact, I don't see anything near term supporting these markets. If I go over to Europe and look at the German DAX, right, coming up to the top, doesn't have any volume as it's getting there, testing right now, no volume, that looks like it's going to fail. The only thing that looks like it can continue on is some of these indexes where the valuation has been so great. Here's the Canadian index, that one's still pushing higher. If I look at the Australian index, that one actually has pushed pretty well. It's back up there at the highs again. So, you know, we've got some places, if you will, that are still, you know, they look like they can push a little bit more. Another one actually that looked pretty well, I'm curious to see what it does tonight, is Taiwan. So the Taipei is breaking out, ABCD structure to the upside. That's a lot of chips. And given the weakness in the semis, I'm wondering what's going to happen here. Is this going to be a false breakout or not? Okay, let's go look at the OX markets and see, like bonds and a dollar and so forth. Let's start with the dollar. The dollar was trying to push higher last week. It was struggling to do so, but it was getting a little bit of a push. No volume, back up into the swing point low. So this is a retest regen going on. So if we look at the low is here to there, so we could trade up quite a bit still just to do the full retest regen. You came back within 6 bars. This is on the weekly. Let's take a look at the daily and see what that one looks like. And so the daily gets over a swing point high and then right back into it. So a retest regen here as well. Yeah, so that's a retest regen as well. I watched the dollar because of the gold market, the commodities. That retest regen will be kind of important for them because if gold's going to push up, the dollar needs to get weaker. So if we pop in and look at gold, let's see what it's doing. And gold's a nice trade because it moves so much, large percentages. So it fades back in, low here. This is the retest regen. That top is 122. It got to 123.11. On the daily, 123.11 was the extension on the ABCD structure to the downside. So if we look here, right, that low, back up, back down, that was an ABCD to 123. It got almost to the penny. Then did a little stair step on the way up, coming back in to do a retest regen itself on the daily now, and that's this bar. And that one actually comes after 1, 2, 3, 4, 5, 6. So this one probably, if it's going to fail, it will fail as it comes into this bar, and it's right at it. Maybe that test comes tomorrow. If so, gold comes down. You would think the dollar goes back up. Let's see what silver looks like. Worse. So I don't know about the commodities. It's certainly not the gold and silver. The USO, trying to put an ABCD structure in place. Let me go look at the FXE since the ECB did nothing. So this is the weekly. So it tests over the highs, comes back in, 136.71, 136. So that's the retest regen bar. So it's trading back in, doing a retest regen, and it tested right to the bottom of it. That low was 135.10. It's at one. It got underneath it, did 1.8. The breakout bar had 1.4 and 1.1 over here. That is not good news for the euro. So you're hitting the bottoms of the regenerate zone, and you're doing it with more volume. Let me see what the daily looks like. Yeah. 803. Didn't quite have enough. This is going to get a little bounce first, and then we'll find out if it's going to break lower. It looks to me like the euro's getting ready to break lower finally. So it's going to get a bounce off this bar, wide price spread, right? Price spread is from here up. Big wide price spread bar, comes into it, trades out. Doesn't have quite the volume. Going to get a little bounce back into this bar, probably one of these two, into this zone, and then maybe give it up again, set up another ABCD structure to take it lower, take it back down into the bottom of that bar. That should put the dollar higher, which is going to hurt gold. A little bounce first in the euro, then some more downside. Okay, let's see here. Got a question. Kellogg's. Well, that maybe took off from what I saw. Let's see what it looks like. Yeah, and then you did a takeaway bar, the very next bar. Those are never good. I don't know what caused it to jump. I saw it jump on Thursday. I didn't see what it did yesterday or Friday. 66.70. So it didn't test the top. And let's see what the weekly looks like. Well, that's a mess. You know, I have no idea why it jumped like that. Maybe you do, but it's gonna, when you see this kind of a bar, and then you see the next bar, especially like it is, right? This becomes a range bar, and you just have to wait until it shows you which side of the range it wants to break. Now, the trend, I assume you're wanting to go long. The trend definitely has been up, right? So you can buy that low and just put your stop real tight and see if it wants to go right back up and test the other side of it, right? It's a pretty good, what is that, $3 on, yeah, it's about $3. $3 on 6, that's about 5%. That's a big move. I mean, you know, something's wacky when you start seeing stocks like Kellogg getting these huge moves. Oh, a takeover. Okay. Well, all right, that makes more sense. I mean, something's wacky, right? Takeover rumor. All right. Well, I don't know. You know, you can live and die by the sword on those kinds of trades, right? Because if it really is nothing to it, this thing's going to come right back down. You got a bunch of swing point lows that are lined up. If I'm trading this long, I'm gonna buy a test of that low that holds, and I'm gonna put a tight stop. And if that's the case, I definitely wouldn't be shorting it if it's a takeover rumor. And you know, if that's the case, then you know it should hang up here in that range. But you know, just be careful with it. As long as you're on the long side of it, you're probably not going to get hurt. Okay, well, main thing this week, you know, there's a little bit of economic data, but not that much. You've got earnings starting to leak out. Financials are usually, the big cap financials are the first. Wells Fargo, JP Morgan, those guys come first. They usually set the tone. They've been very strong, and I suspect they're going to have good earnings again because of the spreads, you know, in terms of what they borrow and what they loan. You know, their borrowing rates versus their lending rates. And so from that perspective, you know, they should be okay. But once you get past them, I'm not sure who's going to carry the ball. So as we come into earnings season, we still have huge divergence. We got a lot of pressure on big cap technology. If you want to watch something, what you want to watch is the retest regens on S&P 500. If this can't hold this, it's not going to be very long before it's down here visiting these guys, and I think this time down is probably going to break them. So, you know, this needs to hold, and it needs to hold right away. If it doesn't, I think that divergence that we've seen is going to get, we're going to see that narrow, that spread narrow back between the Nasdaq and the S&P as the S&P barrels down to catch it. But got to break it first. So far, it's a bull market. Doesn't want to give it up. That's what I'd be watching. All right, folks. Thanks a lot for joining me. Take care of yourself. Have a great evening, and I'll see you next time. Good night.